Good morning, students. Today we are going to take up Chapter 10, Part A, that is Introduction to Financial Market. We'll be only giving a glimpse of what this market is, and then we'll be going for intricate detailings in further upcoming parts. As you could see in the diagram, that business firm, then financial market, then household saving and bank. This is how your money moves. Your saving at individual level moving to the bank, then banks giving it to business firms, then moving to financial market. We'll come to it in explanatory manner that financial market is a market for creation and exchange of financial assets such as shares, debentures, bonds, and government securities. It's a network of institutions which provide short, medium, and long-term form. Financial markets makes it possible to transfer the money from investor to the entrepreneurial borrowers. They bring together the lenders of the fund and the borrowers of the fund. Two alternatives through which allocation of fund can be done are your banks and financial markets. Now, household savers can deposit their surplus fund with the banks. Banks then lend these funds to the business firm. Household savers can also invest their saving in financial market directly by purchasing shares and debentures offered by the business firm. Both banks and financial firms are competing with one another. Now, if we see, as you could see over here, function of financial market, where we say the first one is where you are mobilizing fund. Then you are having best price. Then liquidity is there and reduction in the cost of the transaction. Now, savers, financial markets, and companies. You see in between, I have given 4 points. First, second, third, fourth, you can see in the diagram, and in between is the transaction part from the saver to the companies through the financial market and the financial instruments. So if we specify it in an explanatory manner, it comes to mobilizing saving. It mobilizes saving and channelizes them into most productive purpose. It offers the investors different investment avenues and helps to channelize surplus fund into productive use. Second is price discovery, the best that you could get. Price of any product is determined by the forces of demand and supply. The interaction between the investor and the business firm facilitates the price determination for the financial asset, which is being traded in a particular market, that we say as bargaining power. Then it provides liquidity. Financial market provides liquidity to financial assets as they can be converted into cash by selling them in the market very easily. Then is reducing the cost of transaction. Financial market provides a common platform where buyers and sellers, they meet to trade their securities without much cost and time involved. So we find that these are the 4 major functions of financial. Now, if we go for classification part of it, we will see that financial market goes with a broad classification of capital market, which is for long term, and money market, which is for short term. Then even this capital market is further subclassified into primary market and secondary market. I'm only giving you a gist of it. Primary where new issues are coming, secondary where already issued securities are being dealt, and both of them are being controlled by SEBI. Participants here are banks, mutual funds, LIC and others. Now next is money market for short-term requirement, that is within a year, and the various instruments which is included in your bill: treasury bill, commercial paper, call money, commercial bill, certificate of deposit, and here the participants are Reserve Bank of India, banks, LIC, investors and others. In nutshell, remember that the financial market is broadly classified into two, we have already said. Now in this, we need to first go for classification in between the two, and then we'll go with the money market in detail in our next slide. I'm sorry, market regulation. Commercial banks are closely regulated, whereas capital market, here the institutions are not much regulated through it. Now, in just you have to remember three major things. Duration. Money market, less than 1 year. Capital market, more than 1 year. Then the purpose. Money market for working capital requirement and capital market for fixed. Then face value. For money market it is high. For capital market it is low. And risk part. In case of money market it is less. In capital market it is high. So this was the basic introduction of what financial market is. We'll be taking up money market in next part. Stay tuned with us. God bless you all.